And Rodrigo asked you about co-insurance, and sometimes what I've seen is the captive of the insurer, the insured, using the insurer to like operationalize the insurance.
To do the
How does it work? First of all, if you can explain for the people, what is a captive, how does it work, and
Yeah, so in the simplest terms, a captive is an insurance company that is created and owned by the insured. So one of our customers will decide that they want to take a portion of their own risk, because in most normal cases, insurance companies can only deal with other insurance companies or reinsurance companies. We have to have that in place in order to transfer risk and premium to our customer. So customers will put a captive in place. They'll create this insurance company within the body of their own company. There's other routes to get to it, but that's the simplest one for an explanation. And that allows them to take a piece of their own risk. And we were talking about your deductible example earlier was a perfect example of where I would expect we might see a captive come into play, because that company doesn't want to take a huge deductible across their entire portfolio, but maybe they'll accept a large deductible on that one location with problems. What they can do, though, is keep the deductible the same, but say that they're going to put their captive in to take that first layer. And a lot of times, particularly in the property space, we see captive acting as a primary layer insurer. So if the market will support, just making up numbers, $1 million deductible, and the customer's happy to pay that, but they feel like they have a strong risk, they're not going to have losses, they have faith in their own risk management practices, maybe they'll let their captive take up to $10 million. So they essentially have a $10 million deductible. They can put that out in the marketplace, get a much better rate from the carriers, and take their own risk into their own company. Now their captive gets paid. They'll work with the fronting carrier on evaluating what type of premium can flow into the captive. There's certain financial tests that have to pass to make sure the transaction's legal. But it gives a way for the company to take some of their own risk, maybe make a little bit of money on the premium side, and as they get into it, they can use their captive for a lot more strategic aspects of their business. And it's something that we see pretty prevalent in the international program space. It's something that I've spent a lot of time working with captives and different ways of utilizing them, going beyond just that primary layer and having them actually play as a participant in the panel, doing different things where maybe we start to share some of the risk after a first or second loss event. There's a lot of exciting things that the companies with more open minds can do with captives that are going to help them in their overall approach. And honestly, it's something that I see starting to become more of a trend in Latin America, where some of the major captive servicing companies are starting to open offices here, starting to talk with some of the larger companies about the benefits of captives, and I think we're going to see that as carriers as well. We're going to see it becoming more and more of a thing for Brazil and across Latin America.
Do you think it's a tendency to the future? The companies are like that to do a captive, or?
I think that we're definitely going to be seeing more. Certainly for Latin America, it's going to be the larger companies that lead the way, because captives, they do require some administration. They require some capital to start them up. So they typically are only going to make sense at a higher level. That's where you can get into sometimes some of the brokers. Some carriers have captive facilities that they can offer to customers. We have a product that we call a virtual captive that allows a customer to have sort of the same impact as a captive might have, but without going through the startup costs, where it's a direct relationship between us and the carrier themselves. So there's a lot of things that can be done. And I think as we see the insurance market here in Brazil and across Latin America continue to expand and continue to internationalize, we're going to see that as another aspect that customers are considering to fulfill their risk management objectives they have.
If I understood well, maybe the advantage of it is the options that the insured have, because when I say, when I first heard about captive, my first question is what is it differ from it's not easier to do a deductible and keep the money in their pocket instead, pay and take it back?
So it depends on the customer and what their goals are. Sometimes you can get into a space with a captive where you're essentially trading dollars is the term that's used, where any money that they get in, they're paying right back out in claims. Maybe they've got reasons that makes sense to them. If it does, then happy to facilitate that structure for them. But most of the time we see companies establish a captive where they're confident that they're not going to have a loss outside of a true shock loss. They don't use it as a working layer. They use it as, we're confident we have the protection in place. We don't think we're going to have a loss in this layer. This allows me to save money on my premium because the traditional carriers are now pricing my risk at a higher deductible level, and also receive premium into their captive for that layer. And if they don't have a loss, that's their premium. They can do what they want with that. They can dividend it back to the parent company. They can invest it. They can use it to complete recommendations, whatever it is that they is going to help them with their ultimate goals. But usually what we see is captives working in that way.
And generally speaking, they have to apply same rules as an insurance company, right?
Yes.
About legislation and etc.
They do. So most captives don't have to go through full licensing processes. There's different requirements for the different key domiciles for captives around the world. But typically the requirements are less than for a traditional carrier because the premium volumes are less, the capital intensity is a little bit less, and they're most of the time only authorized to write business for their parent company.
Okay.
There's very few captives that go for a license to write third-party business. When they do that, there is more regulation that comes into play. But there are regulations they have to follow. They are an insurance company, so they have to follow the regulations of insurance carriers, but it all depends on where they're domiciled. And that's why you see the same places come up again and again. There are areas that have strong laws around how captives are regulated, but they're friendly to the captive formation, whether it's the amount of capital they require for startup, the meeting schedules, whatever it is, it's something that makes it easier for companies to operate captives in that country or state in the U.S. So you'll see the same places, Bermuda, Vermont, some of the Channel Islands outside of England, some of the Caribbean islands. Those are the key domiciles around the world for captives, and they are that because of the way that they've set up their regulation.